Okay, good morning. Again, I'm getting used to setting this up. Good morning, Bob. Okay, good to see you. All right. We are on in two places, I believe. And we are on live on Discord. Magnificent. Good evening, Sandy. Good morning to you, Stephen. Yes. All right. So the transition is happening. I will send another Discord invite today. Hopefully, hopefully by the end of the week, nobody is joining the Zoom meeting any longer, and we can put it to bed. In the meantime, we're gonna continue to use both until everybody is comfortable making the transition. Okay, so you should, let me see, streaming. Okay, on uh, on the Discord stage, do you see my screen? Um, yes. Sandy said, really glad it gives me the right times, right? Always the right calendar. A magic. All right, let's get started. Welcome everyone to the Market Watch Group Midweek Check-in. I am Scott. I will be your host. Here are the disclaimers. As usual, education illustration only, not advisors, not brokers, no guidance, no recommendations. Today's agenda, opening analysis. Okay, so yeah, we find ourselves kind of at a crossroads here. Um, We've had two consecutive weeks of market decline in our posture. We continue to see additional stress. We continue to see things like the Fed coming out and saying, yeah, it's taking a while. So, okay, we adjust, we adapt. Um, have you taken losses? I would say probably, right? A couple of losses here or there. Nothing terrible. I've taken a couple of losses, of course. That's what happens sometimes when you try to put something on, things get hit. Are they small? Are you keeping them? Are you getting out at the right time? Um, Etc. Awesome. Okay. So we will take a quick peek at our market posture. We'll look to see if there's if you have open trades, what are your thoughts? Is there anything developing that we want to be thinking about? And then the the chance for any setups. Last week of this second pass at the trading plan, um, this so far this year, two times we've gone through it. We're getting ready for our third. Okay, so let's get into it. Let's get into it. Okay, now that I have switched to a different screen, is everybody still seeing the screen? If you could let me know, because we're on two different channels. Yes, okay, good. And those of you who came in through Zoom, oops, that's not what I wanted. I seem to have lost my Zoom chat. There we go. There it is. So if you're in Zoom, make sure you can see my screen. And then remember, this week's our week to try to make that transition. Okay. Yes, you should see Yahoo. What do we have in the futures? Well, we have a bump. So that's good. Real quickly, though, let's just actually start here. We had a great discussion on calendar spreads last night and how they function in a manner similar to covered calls, uh, but actually work to some extent better in a uh, low implied volatility environment than covered calls themselves. They are a leverage strategy. Very nice discussion, I thought. If you missed it, the recording has been sent and is posted. Our high was 524.61. Well, we got as low as 503. Whoops. 503.53. 21. That looks like about 4%, but let's just do the math. Okay. Apparently, I'm not great at calculators. Divided back into 524.61. 4%. Okay, so now we have had a 4% consolidation. Remember, I said 4 or 5 is just a standard consolidation. Correction is more than double this right here. Why is that important? Because if we come down and when we come back up, we go up and just have like 3-4 days and it doesn't get very far and it looks, well, then yeah, would we consider the possibility for a speculative bearish trade, right? A speculative bearish trade, even if our market posture is positive. Yeah, absolutely. Absolutely. If this thing comes down here and we end up only 4 or 5% down from the high, and we start to push back up, and let's say we get up and we get to the underside of this old line, or we just don't get, the buyers don't get very far with it. If they push it up here and they don't get very far with it, and it starts to stall out, yeah, absolutely. Now, am I like betting the farm bearishly, putting a bunch of bearish trades on? No, but would I be thinking, hey, you know what? I might go ahead and put this on. Absolutely. Um, Again, that's a lot of ifs, but it's just sort of as we think forward proactively, we want to have a sense of what gets put on the table and when. And that might be different for all of us, right? Some of you might be like, you know what? I'm not. We talked about this. We had this exact same conversation, if you were here, back in August, September, and October last year, when things were like, hey, our posture's continuing to drop. It didn't hit, the posture itself didn't actually go negative till like right at the end, and then things popped. And you might be thinking, wait a second, you're telling me we went bearish right as things? No, we didn't go bearish. I'm saying that the posture literally barely touched the underside of zero, which means we were neutral at best, neutral. At worst, I would say neutral. It barely ever even touched a negative number. I don't mean we were ever bearish, right? So what that means is you can see that by the, there's some drop left. Let's just be aware. Okay. 4% though. Can we easily recover and resume our prior trend from 4%? We've been paying a lot of attention to it. We did get to the underside of the 50. Now, again, there's no reason for us to be like, oh, that's it. That's it. We're out of here. The market's going to fall apart now that we broke of course not. Now, if we ever broke well below it and then bounced off the underside of it, that's more problematic. We're a little bit underneath it. if we bounce right back from here, then we would be like, oh, okay, just sort of, meandered below. So we never want to overreact to any one particular piece of information that we get coming from the market. We want to acknowledge that it broke the 50, and that's something that we've been paying attention to. So yeah, we'll take a look. Okay. Okay, what else? The problem with our posture. A long term, this is nothing to us. Long term's not going to change. Our long term score was strong. It made a new high. We're now looking to see where the next long term low might be. Sorry, I don't know why I'm drawing a channel right now. There we go. So the short term, though, this is where we started, and we opened up like, hey, everything's looking better. We're bouncing off the 50, and then we dropped to a new low, a lower point. As of right now, with this touching a lower point than we did last week, yeah, I'd take another quarter point. Another quarter point taken away, given for the seller. So that's going to drop again. Where are we now? I think we're at 1.5. Is that right? Yeah, I would drop that one more time. It's still positive. That's the thing, right? It's just kind of slowly, we're saying, all right, we're slowly taking it away. It's like we're giving the buyers a chance to regain strength, because markets tend to have a pervasive bullishness. That's better. There it is. Bob said we were at minus 0.5 October 29, right? I barely touched it, but even at that point, never did we say we were bearish. That's for sure. Volume is going to drop to negative as of now. That's going to be another one. So I see a half of a point potentially already. We went down 3/4 of a point on week 1. This last week we went another point. I see us at least a half. The other one that could, the sector major market, who knows, but volatility. So yeah, I do think if you look at, we did have big volume yesterday, not yesterday, on Monday. Yesterday we didn't. Yesterday was average volume. So that, yes, this is gonna likely push us into a negative territory on volume, and that'll be our first negative. Okay. Lastly, the VIX. Let's just go see. We're about to open this morning positively, but the VIX. So you can see we this is the highest we've gotten for a while here, right? Now as we come down, I'll tell you, if you still have any remnants, any hedge that you held from back here, now you can see why it's paying dividends, right? Markets dropped, volatility's risen, and that hedge has probably really helped, even if it was only half of the original position that you put on. I would imagine that hedge was still quite useful. So yeah. Steven said, as soon as the market settles down due to inflationary pressures, we will get bullish if earnings stay positive. Yeah, I agree. I mean, the fact is that, there's right now, the risk of inflation is much higher than the risk of recession because of the underlying strength that the market's showing, particularly in the labor market. So Now, what else? So here's the problem. This still has an escalation type feel. What do I mean by that? So we were down here and we popped up, breaking that consolidation there. Whoops, breaking that consolidation there. We pulled back and we got a higher low and we've popped up and now we have a higher high. And as this comes down, if this comes down and only drops a little bit, and we're sitting here at 17, and then it turns up again, what's the fear? The fear of a correction would look like that. And so, yeah. Now, what would be ideal from here? For this to look strong, we would want to see this come down. And then when it goes up, not regain. Then we want to see where it gets a lower high. And that's when we think, okay, we're not necessarily going bullish, but at least settling down. As of right now, this thing is looking like it's gonna escalate. However, I don't think right now I would score it any lower. We scored it for the higher high right here. We scored a higher low and a higher high this last week. Remember? We dropped it a full half of a point already. And you can see that it did technically, like you can see, like, okay, we got up to 1920 and then we got to 1946 and 1956. I guess if you were a stickler, you could say, well, that was a little bit higher, so I'm gonna drop mine another quarter of a point. I'm looking at that as being this day we touched higher, but we ended at the same place. This day we started higher, but we ended down here. So I'm gonna say that we've already scored that higher high. So this doesn't look like it would drop lower to me, actually. However, it definitely is still concerning, right? Still concerning. Okay, so let's go see how our market opened as we establish our opening range. Let's zoom in a click. Let's erase this floating line. Okay. So we're trying to catch a little. Right? We're trying to catch a little. Where's my first concern? I have a concern that we're possibly in maybe like that, some kind of a consolidation. This thing, if we bounce up like that, and we pop off of it, that's what I'm talking about. That right there, we get another day higher, and then up here we sort of pop, and then we start dropping from there. That's the market showing the VIX that was coming down and then pops back up pretty early, right? Yeah, that's concerning. That would indicate we're still in this consolidation to the downside. And that lowers expectations. So yeah, it's hard. Right now, I would say I'm more reluctant to put bullish trades on than I've been in probably months. Give me your thoughts. Are you holding bullish trades? Possibly you're holding some that have time value components, covered calls, spreads. Maybe you have a couple of trades that are still working out despite the market showing some concern. Are you reluctant? Are you ready to put new bullish trades on? Leery about adding more, Bob says. Okay. All right. Perfect. Perfect. It's quiet. It's quiet in Zoom. Those of you in Zoom be thinking about the transition to Discord. All you got to do is follow the instructions as they come emailed, pop over there. It's a whole new experience. Very fun, very exciting. Okay. We go, how far did we get in our opening routine here. Not very far, right? Futures were up. Now the market is up. As far as news today, there's not much that we're expecting. So let's go in here. The base book will get released later today. Whoops. The base book will get released later today. We have Loretta Mester and Michelle Bowman speaking. It's all about, you can see a lot of what we reacted to yesterday was Jer Bear, Jerome Powell. What is the base book? The base book is a Fed report. I mean, it's another set of like, it's not their notes because they release their meeting notes, but it's kind of like almost like a journal that they keep of their internal workings. Let me see if I can get a formal definition. Summarizes the information by district and sector. That's okay. So that's the designation. It's a summary of 12 different reports from each sector. It's 12 different districts. But that's what's basically informing Fed meetings. So the market will peruse it looking for subtle indications of language changing, things like that. Okay. Base book. Great question. Excuse me. Whew, pardon me. There's the third one. Okay. Tomorrow, jobless claims. Thank you, Graylin. Appreciate that. Tomorrow, jobless claims. We have a little bit more Fed speak. Not much really going on. It's really more earnings now. Right now, all of a sudden, let's pull up. It's funny because when I first started in trading, Alcoa was like the gateway. But now, over the last 25 years, financials have sort of shifted and moved into a earlier position on the earnings calendar. So now we have a big wave of large earnings released. But Alcoa is really, for me, still the main kickoff. So Alcoa, AA, first stock. It's a Dow component. And you can see that they release earnings today after market. So this is like the real start of earnings season from now until about May 1st, right here. Over this next 2-week period, a slew of earnings, right? Lots and lots of stocks will be reporting earnings. So pretty much everything that's not financial on your watch list is likely to be on that list and something that has a probability of being impacted by earnings in the next 2 weeks. Okay, great. Let's put that on the radar for ourselves as part of what we're watching for market conditions, because there's not much else from the Fed. Excuse me, not the Fed. Well, the Fed is a huge amount of our news discussions, but not much by way of news. Next week, nothing on Monday. These S&P flash reports are meaningless on Tuesday. Durable. We really don't have anything until Thursday when we have GDP and more jobless claims. So what do we have? Lots of earnings. Lots of earnings. Where is the Fed's head now, according to the market? June 12th, the worst odds yet at 82%. Actually, no, we hit 83 a week ago. So, but still much worse than we've seen. No expectation there. July used to be, I was going to say June and then I said July and then I sounded Southern. July is going to be still unfavorable. Not quite 2-1, but it's continuing to stay in this area, and it's much worse than we've seen The first hope where there's any increased chances in favor of is September. So at this point, really, we're thinking, and I would say slash hoping September with two cuts. Two. That's the thought, right? Two cuts. Okay. Now, with all that, based on what we started the year with, how is the adjustment for the market? 4%. 4%. That's what we always have to remind ourselves. Okay, let's go take a look at the watch list. Although you can see here, nice a jump on Alcoa. Alcoa is aluminum. Aluminum is materials. We don't love materials being strong. we prefer materials and oil stocks to relax and pull back and ease some of that inflationary tension. Okay, let's get to the watch list. Let's get to the watch list. Okay, Apple. I'm already starting to think about Apple. I said, look, when Apple breaks, it broke. Where's my drawing tools? When it breaks, which it broke, this consolidation with volume, and mind you, got up here, retested these old highs, took out these highs. Now I'm saying, hey, can it hold? And you can see it's trying to hold not just above the higher low, but also above the consolidation. So if it stabilizes and turns, I'm thinking, I think Bob's thinking about it too. I'm thinking about it. So yeah. And Apple is a market leader in technology, and technology is a leader in bull markets. We would love to see Apple start participating bullishly again. Apple was a big piece of why things reversed back late October, mind you. AIG, yeah, broke the 50. So there's some stress in the financials for sure. We've been riding financials for a while, and now they finally kind of have like, maybe just a little too stressed. You're seeing here, broke the 50. AMD, I've been thinking about kicking it for a while. It's like I keep holding on to it because chips just tend to start moving again, and I want options, but well, we'll see. Amazon holding up. It's this bastion of hope and consumer, but it's just kind of grinding. The problem is you might be thinking, wait, Scott, did you say grinding? Grinding sounds like it works for calendar spreads. It does if it's grinding with low volatility. If we had already talked about it back here when we're like, we like Amazon, but it's just grinding, you'd be like, oh, grinding, what's the volatility? Low. And you'd be like, doesn't that make that a nice diagonal spread candidate? We'd be like, yeah, it sure does. And I think you all know what would have happened if you had put a diagonal spread on here in the path of this trend with the volatility increasing. Perfection. Now what, though? You're like, oh, now we can't do anything? Actually, now what can we do with a grinder with high volatility? A broken wing butterfly. Broken wing butterfly. You asked for it. I've got to. You remember those old commercials where they'd be like, there's an app for that? Back when apps were like, oh, apps. There's an app for that. There's an option strategy for that. You say a condition. And realistically, you'll boil it down to there's a few core strategies that you tend to use. Options. Keep coming Tuesdays and Thursdays for the rest of this month, and then we're going to do something new. There's an op for that. Love it. Yeah. Awesome. Okay. AXP. So more financial struggles. Less so here. AXP held the 50. It's getting ready for earnings. Boeing still a dog. Bank of America. Earnings came yesterday morning. They did okay, but they, sold off through the day. Now they're trying to hold up just under the 50. City just under the 50. Caterpillar still looks great, but we're running out of time. Let's move this over here and just kind of so you can see that earnings now is here. Even if you get a start, you might be like, I don't know if I have time for this. So yeah, I'm a little nervous that we're not going to have time to put a trade on Caterpillar. We'll see. CMG still holding up, just kind of sideways though. Capital One. Yes, I took it and stopped out. Okay. Yeah. And it looks like it might still be one that tries to hold near the 50. But that's just one of those days where you gap up, triggers, comes back. All right. I can take that. Oil. Okay. If you don't have oil on your watch list, here's one, but there's probably others. XOM, OXY, MPO. You can easily build a list. But we've talked about the fact that if oil is going to continue to be strong and going to continue to put stress on our market, then we need to be ready to counter that by trading it. Well, here it is. Higher high, pulling back, higher low, everything's setting up. Oil. Yeah? Oil. Costco. Looks okay. It's trying to sit on top of the 50. Crowd, a little under the 50. Delta's holding up. Looking okay. Here's the Dow still sitting under the 50. Same with Ford. Michael was right. He's like, I don't know. I think you should chuck it. Yeah, I think he's right. We broke the 50. Earnings coming up. Let's see if it shows up again later. Good call out on that one. Is Michael here today? I didn't remember if I saw him or not. It's hard for me to keep track of where everybody is. I don't think he was able to make it today. Okay, fair enough. Back to the watch list. GE. GE looks still pretty strong, actually. Looks like it could be trying to move, but it does have earnings soon. Gold is still high. Google actually looks like it may be trying to give a setup. Let's keep an eye on that. IWM, small caps are down. We'll see if they can try to recover. Meta looks very close to a setup. Unfortunately, they're both also showing earnings soon. So like I said, earnings likely to impact. And here it is, impacting. Microsoft holding up on the 50. But overall, really turned into a meandering position here. Yeah, we'd love to see this one recover from here. Micron looks pretty good actually. So if there was one within chips that you might think about trading, I would say Micron and Nvidia. Netflix. Netflix still looks pretty good as well, but what do you have? Earnings in a couple of days. Yeah, we might find ourselves having to sit on our hands a little bit here. There you go. That's when we looked at for a diagonal spread. Here is Picard for industrial still holding up. PLTR down, QQQ. Here is SMCI. Okay, a little bit of hope there. Gains are holding up. We're now 20 minutes in. Let's go take a quick peek at the opening range. And there it is. We break the range to the downside. I think we end up at 503.5 when we close today, and you can see there's some threats happening there, but let's wait. If it breaks to the upside, let's take a step back. If it breaks to the upside, I think there's a chance we might make a run towards this 509, 510 level. There's not a lot in between these levels here. So we may retest the bottoms at 503, or we may try to make a run the other way. Fair enough. Let's go see the rest of our list. Taiwan Semiconductor holding up, but earnings in a couple of days. Yeah, the market's kind of tying our hands. You can see the volatility here continuing to drop. Waste Management holding. Volatility though high, earnings coming out in about a week. Walmart stable. This looks actually pretty good. What's the problem? Volatility's high. Volatility's high, right? So this will be great for us to start talking about tomorrow. What are we talking about tomorrow? Well, we're talking about advanced option strategies, butterflies, which leads to broken wing butterflies, and iron condors. Those are neutral and neutral to slightly directional when volatility is high. Just like diagonal was slightly directional when volatility is low, right? Okay. You can see materials have pulled back and are starting to bounce on the 50. We'll see if they resume their trend or start to ease a little bit. Communication services still look strong and bouncing off the 50. We like that. Energy, unfortunately, looks like it's finding some support. Financials, unfortunately, looks like it little more than a consolidation, a little bit more like a sell-off. So we're gonna have to see how those fare now going forward. Industrials still holding up. Technology still holding up. A little less so, actually, less so. But I'm not seeing defensiveness flooding into staples. I'm not seeing defensiveness flooding into utilities. So there's some inflationary pressures, but other than that, I think it's overall we're still in a pretty good place, and I would expect the market posture to remain overall bullish. Here is consumers. So yeah, you can see we're not feeling it with consumer stocks. Healthcare down. We may lose a quarter point on sector rotation. So likely to drop into the fours. The question is by how much? Yeah, caution. Let's be cautious in this market right now. Let's see how this dust settles. Do not rush in. If we have to wait and on the next round of bullishness, if we miss bounce trades and end up saying, hey, you know what? I'm going to wait until I get like real strong Heikin-Ashi signals. I'm going to wait for continuation signals to make sure that I don't catch something that just is another turnaround. Great. There's ways for us to adjust and adapt to these conditions. That's all we have to do is recognize, hey, overall, I'm still bullish, but there is more concern now, especially as we look at our third consecutive week of deterioration in conditions. What can we do to prevent false signals, but still enable us to trade bullishly if something starts to move? Right? Move into a continuation mindset. It requires a little bit more, but it still gives us. So we'll think about that, and look to act on that. Okay. Lastly, before we completely wrap up here together, you are now working on. Whoa, where's my trading plan? There it is. You're now working on section 8. So if you've started with the group relatively recently, This is great for you because we are going to next week start back over on section 1. We just keep cycling through. It is a cycle of trading plan improvement. Join us, jump on into the cycles, swirl around, constantly making our trading plans better. Improvement strategies. We're really focusing on this. Oops, no, I don't want that. This first one is kind of like a, hey, if you want to set a outcome goal, great. This is our focus. Process goals. What are you doing to make your trading better? We need a goal for, we need record keeping for our goals. We need like some kind of a spreadsheet where we can establish the goal and the timeline and the steps and what frequency and notes and right. And then have 2 or 3 goals at any given time that focus on very specific elements of your trading based on observations you're getting from your trading results and your day-to-day activities. So yeah, Graylin, I love it. Excited. You should be. It's going to be amazing. So those of you finishing, make sure you have at least 2 goals that are correlated, one to a weakness that you identified in yourself in section 1. And the second one correlated to something that you have identified in your trading using your record keeping log. At least one psychological, right, from strengths and weaknesses, and at least one from observations made through our trading log. That's where we find the right goals to set. All right, it's good to see everybody. I got to run. So we will have a self-serve meeting this afternoon. There's an afternoon session for the last hour. I think I have to launch that, so I'll be ready to launch it, or I'll have someone ready to launch it. So it's just a test. If you guys want to show up and chat about the market and just see who's there, last hour, come to Discord, see who's here. If not, I will see you tomorrow. And there's actually another one like that tomorrow. So there's 2 in a row. And then if not, I'll see you guys tomorrow night. It's good to see everybody. I'm still getting used to this. I know. Is there a new link? You tried the old link and it said expired. I'll send a new one today. I set them to never expire. And then people are like, it expired. I'm like, I set it to never expire, which clearly Graylin shows. Oh, sorry, not Graylin, Greg. That's Greg. Greg, sorry. I swear, man, I set it to never expire. But it shows you that I'm learning to use it as well. So yes, I will send a new one today. A separate email today that should have the most valid link. I appreciate you mentioning that. All right, everybody, have a great rest of your day. And as always, happy trading.